Welcome, everybody. This is Edgardo, Balentine.
And this is Scott DiGregorio, and welcome to the Real Estate of Tomorrow podcast, where we're going to discuss the rapidly changing landscape of the real estate industry.
And the steps that you need to take today in order to survive tomorrow.
Look, I'm going to give you the perspective of a 25-year veteran, somebody who has been there and done that.
With Jesus' life for all fart, okay?
Screw you, man.
Look, I'm going to give you a fresh perspective from somebody that's applying those steps today.
So that basically means you're young and you don't know shit.
All right. Let's get this started. Welcome, everybody, to the Real Estate of Tomorrow podcast. This is Edgardo Balentine, and I am with my co-host,
Scott DiGregorio. What is up, my brother?
How you doing, man?
Good, man. It's going to be exciting to talk about a topic that everybody's getting freaking wrong.
That's so true. What's funny is we talked about this, in a couple of episodes ago or last episode, and then more changes came through, and I think it ended up confusing everybody. So just without further ado, what we're talking about is the LLPAs.
Dun, dun, dun.
Nobody knows what the fuck we're talking about. So what are LLPAs, Scott?
All right. So look, first off, go back and listen to the last episode, the other episode where we talked about this to get a refresher on it. But loan level price adjustments is basically risk-based pricing. So depending on what's going on in your scenario, credit score, down payments, property type, property purpose, all of that stuff impacts your interest rate. And there's a matrix that anybody could Google Fannie Mae LLPA and pull it up.
So basically, even the same person, like you come in and you want to buy a house. Well, you're going to get a different rate depending on whether you're getting a condo, for example, or you're buying an investment property, or you're buying a primary residence, or you're putting 20% down, 30% down, 50% down, all of those things. The difference in each rate are determined by what we call the LLPAs. Basically, for the listener, what that is simply how we end up getting to your rate beyond just your credit score. All the other things that will affect your rate. And there's been some major changes. We talked about it in the last couple of episodes with the changes that the conventional loans came in, the changes that FHA came through when it comes to the mortgage insurance, and then the last one was the new government change that's apparently punishing everybody with great rates. And what I'm getting calls about is, how is it possible that if I have an 800 credit score and I'm putting a 20% down, I'm going to get a worse interest rate than somebody that has a bad credit score and is putting no money down? So why don't you clarify this a little bit?
Which is what the media has screwed up. Now, look, I'm saying the media screwed it up, but there is some truth to it in that what the government's trying to do. Should I take a minute and try to defend the government? Because I generally don't do that.
How about I do that?
Okay.
So you don't feel too bad. So what the government is trying to do is they're saying, okay, we have a housing problem here. That's the first thing, right? Affordability problem. It's hard for people to afford homes. So they're saying, well, for us to change this, we need to make it a little bit more affordable than it is right now for people that don't have a lot of money to put down and people that maybe are a little bit more credit challenged. So your typical borrower that doesn't have 20% to put down and excellent credit, we need to make sure that they have a possibility to get into this market. Great. They agree with that and they say, perfect, we need to make a change. And the idea is, okay, well, rates are high right now. Let's make it so rates are not going to be so much higher for those people. Let's make them a little less high. Well, like everything else, they go, all right, where are we going to find the money? Where are we going to find the funding from? How are we going to pay? Yeah, how are we going to pay for this? So what they said was, well, one way to do this is those people that are getting all the premium rates, the best rates there is, the people that have all the higher credit scores and the big down payment, instead of giving them such a difference, like so much better rate, let's just reduce the difference a little bit. Let's just worsen the rate a little bit so we can better the rate of the people with bad credit a little bit.
But under no circumstances is it true that somebody with a 600 credit score is going to get a lower interest rate than somebody with an 800 credit score.
Absolutely.
And that's what the media is reporting, and it's just completely wrong. Now, is it bullshit that
Well, before we get there, let's just finish tabling the explanation, right? So,
Okay.
Scott, if you have an 800 credit score and you're getting a 30% down payment, is it true or not that you will get a better interest rate than somebody with 0% down and a bad credit score?
1,000% true.
It's still the truth right now.
Yes. It's also true, though, that the rate I am going to get today is worse than the rate I would have gotten a month ago.
Correct. So, again, just to explain it one more time. If you have a better credit score and a more down payment, you will have a better rate than somebody with a bad credit score. Okay, that's done. Now tell me why you hate that move.
It's bullshit. It's bullshit because they're taking. Look, there's a lot of different pieces of this, right? But they're penalizing people who are well qualified and using that to subsidize people that are less qualified. And look, trying to make sure that everybody can get into a home. We're in the industry, obviously, rah, all for it. I just penalizing one group to supplement another is a very slippery slope to step onto. And that's what a lot of the outrage is about. Now, I had a client call me up and say, hey, I heard about what's going on. I just want to let you know I'm going to go out and run up all my credit card balances to drop my credit score so I could get a lower interest rate. And I'm like, what the heck is going on? And then I started watching the news, and that's what's being reported.
Yeah.
That is literally what's being reported on major news publications, like national news publications. So that is completely wrong. Now, somebody asked me, well, Scott, like, play this out long term. This stays, this doesn't stay. And I don't know what your thoughts are. We haven't talked about it off air, but I don't see this going anywhere anytime soon.
No, I don't see this going anywhere. And look, I'm with you, actually. I don't think this is the right way to subsidize things, especially because, let's be honest, the people that we encounter with good credit and 20% down are not the, billionaires that we think they are. No, it's just people that, save their money and take care of their credit, and they're still struggling, and they're still like trying to do their best, and they're still hit by inflation and all these other economic impacts here. However, the main thing that happened here is the gap between a great rate and a bad rate just got a little closer. Mm-hmm. That's it. I don't think this was the right way to do it, because I think in this economy, everybody needs a little bit of help. But that's it. I don't see that going anywhere. And I just feel like it's very unfortunate that, like you say, the media and the narrative out there, it's not explaining what this is. And when I listen to what they're talking about and I look at what they're reading, without getting super technical, yes, I guess I get where they're coming from, because when you look at the loan level price adjustment and you see that there's an increase of 0.375 or even 100, we're talking about basis points. Those are not literally interest rates. And I think that's where the confusion is. But if you talk to a lender that understands this, just please don't rack up your credit cards. Don't destroy your credit, because I promise you, you will get a worse rate than if you have a good credit.
Yeah, and look, the in the old LLPA chart, the holy grail was 740 and above, and a down payment of 40% or more. That's
it.
That was the perfect. That's where the chart stopped. Now 740 is no longer the top. 780 is the top, and instead of 30% down, it goes to 70% down. Instead of 30% down, it goes to 70% down, and that's a substantial difference. Now, you're right. The hits, as we call them, right? The price adjustments are small in that category, but they exist. And I've spoken with some clients that are, unhappy about that, and understandable. But at the end of the day, it is what it is.
Yeah. One thing that I want to say, I think it's good, is that there is at least an acknowledgement right now from the government that something needs to be done in housing. What they're doing is not necessarily the right thing, in my opinion, but something needs to be done. And they're acknowledging, too, that what I really think is this move is to appease the masses, right? Without getting too much into politics, we're getting closer and closer to the election. We need to appease the masses. And, like you and I know, the majority of the people aren't really putting 20, 30, 40, 60% down payments.
Of course not.
The majority of the people are putting, I want to say 90% of Americans put 10% or less in their when they're purchasing a home. So I think that's also a strategic move to help those people as opposed to help the people with the 20s and 30% downs.
Yeah, I couldn't agree with you more. All right, so look, that's it. We've gone over it. I think we've brought clarity to it. Do me a favor. I'm sure the listeners have people that are listening to this wrong narrative. Do us a favor. Do them a favor. Share this episode with them because we want to try, like we always do, to provide some clarity in a very unclear financial world that we live in. So I will see everybody on the next episode.
And remember, don't rack up your credit cards. That is not going to work.
Bad advice. All right, everybody, listen, thank you so much for listening to the Real Estate of Tomorrow podcast, the best podcast in the real estate industry. You know it. We know it. We'll see you in the next episode in 2 weeks.
See ya.
Well, thank you guys for listening. And now it's your turn to implement everything you learned today.
Look, you have a question, you have a topic for a future episode?
Share with us.
Yeah, tell us what you're doing. What are you doing today so you could be successful tomorrow? Send us an email at success@realestateoftomorrow.com.
And don't forget to leave us a review, an honest review.
Screw an honest review. Leave us a 5-star review. And for every 5-star review we get, we're going to send you a badass real estate meme t-shirt.
Those shirts are hilarious.
See ya.